I got to ask you first off, what's your take on this news of Ted Sarandos now sharing that top job with Reed Hastings?
Good afternoon, Emily. So I was a little surprised. I didn't see that one coming, but as I thought about it, I know that succession planning has been one of the questions that investors have started to ask about the potential departure of Reed Hastings. And when you look at the announcement today, I think it definitely communicates that that Ted Sarandos is going to be the guy to step right in. I mean, he's been there from day one, and as you alluded to, he's the architect of the original content strategy. He's got very deep relationships in the Hollywood community, very well regarded on Wall Street. So all in all, I think this is a positive development. And I might also add that Ted continues to keep his role as Chief Content Officer, which is going to be very crucial as they continue to expand and deepen their content relationships.
I'm told that Reed and Ted, this basically formalizes how they have already been working together up to this point, and that they will be talking about this, giving some more context on the earnings call about to happen. So we'll be listening in on that. Meantime, what's your take on these subscriber numbers? A strong second quarter, but a light forecast for the third quarter. To Abigail's point, have they pulled forward some subscribers that might have come later in the year because people have been so dependent on Netflix as they shelter in place?
Right. So we knew the pull forward, theory was always going to be a factor for Q3, and we saw that play out in the guidance that they provided today, well below the expectations. That being said, I think Netflix, if anything, tends to err on the conservative side. So we would not be surprised at all if they significantly beat those expectations. With that being said, I think what the pandemic has done is to kind of recalibrate the streaming landscape, where we actually believe that Netflix has consolidated its early mover position by virtue of its all of the advantages in the content pipeline and the tailwinds. And now as we kind of look at how the streaming wars are playing out with the new entrants launching without some of their highest profile shows, Netflix, on the other hand, I think consolidated its position. There's really nothing that changes our long-term thesis for the stock. What we're seeing today is more or less the same type of volatility that we have been accustomed to if you followed Netflix for any length of time.
Meantime, let's talk about the new frontiers of Netflix. They really are global. I mean, the biggest opportunities for growth are going to be international. And as the pandemic continues to play out, I mean, certainly not all countries are in the same position. We're still in a difficult position here in the United States. You're seeing a resurgence in Asia. Where are you expecting Netflix to grow in key markets outside of the United States?
Right. So I think we're seeing the international market is kind of it has a very huge runway. I think this first half numbers since they started to provide the regional breakdown, you're seeing traction around the world. But what gets us even more excited is the fact that they're now in the early stages of launching this mobile-only plans around some of the Asian markets. And that seems to be gaining some traction. They're trying to expand their addressable market. And when you look at internationally, I think the secular dynamics of broadband penetration are still way, way too early. So there's a lot of runway there. But even domestically, where I think most investors seem to have thought a saturation has set in, we're seeing now the impact of COVID-19 and the subscriber addition domestically in first half, actually well ahead of expectations. So I would not even count domestic out at this point, even as much of the focus remains on the international markets.